still watching Lunch Money right here on BTVI. HDFC Bank has tied up with NSDL to launch digital loans against securities. Our colleague Nivrita caught up with the country head for unsecured lending, home and mortgage loans at HDFC Bank, Arvind, Kapil, to really get a sense of how they're planning to strategize going forward. Listen in to that conversation.
See, the industry today has a loans against shares product, which is virtually physical in all practical aspects. You're signing up multiple documents, right from an application form agreement, you're signing up the current account that you're opening on the physical document, you're signing up the pledge form, which a regulator needs, like NSDL. So the customer experience really goes on to having a complete physical sign-off, and then over the 2 to 4 days or 5 days, depending on where his location is, he gets his loans done. And then he transfers the money to his savings account. What at HDFC Bank we've done is tied up with NSDL, which is the regulator who pledges the shares. We've actually converted this whole transformation from traditional banking onto the digital space, and we've converted this into a closure starting from 2 to 3 minutes experience for the customer. So customer sitting at home, all he needs to do is access his HDFC Bank net banking, and we will make it so user-friendly for him. Or rather, we made it so user-friendly for him that he can actually just at a few clicks, he'll have his current account open, he'll have his agreement signed off, he'll have the money into the current account, he'll have the money transferred from the current account to his savings and actually put to use. So recently we had a case where some of the deeper geographies, you had a city called Rewari in Haryana, we had somebody whose dad wasn't well. And he called up the branch told him that in our testing phase we had put it on his net banking and in our soft launch. So we informed him, he found it so user-friendly, he actually took 2 lakhs of loan and actually paid the hospital. So it's extremely encouraging and exciting to see that these things can be put to use. And the whole idea is to empower the customer and do it yourself, and even on a product which has pledge. So I think it could be path-breaking substantially for the world.
From what I understand, one of the main differentiators, and even from the example you just gave us, is that this will help first-time customers come forward and possibly apply for loans. So what kind of awareness, any awareness programs are you kind of starting for this? And also, how much of the growth do you see coming from these Tier 2, Tier 3 cities?
Okay, first question. This product is age agnostic. So if you've got shares and you're 78, it doesn't matter. So, if you try any other loan product, they'll check what your income levels are, and age does matter. So to that extent, loans against shares gives you that advantage. First-time borrowers in deeper geography which don't have credit histories, obviously, if you try other regular products other than loans against shares, you could get an X amount of figure because you're trying the first time. But in loans against shares, if you've got the shares, even if you are in a deeper geography, so nothing is going to stop you in terms of logistics, nothing is going to stop you in terms of you not having borrowed the first time. We are looking at almost 30 to 40% growth in this. We are looking at almost 40 to 50% of our entire loans against shares coming from the digital space. That's what we are envisaging.
HDFC Bank banking big on loans against shares, especially when they are trying to address the needs of their Tier 2 and Tier 3 markets. What that does for the bank, only time is going to tell. But let's turn to Volkswagen, something I was telling you just before the last break.